Over the past several decades, China has quietly transformed itself from a nation largely dependent on foreign gold imports and global financial systems into a formidable force in the world's gold markets, a transformation that few outside of geopolitical and financial circles have fully grasped. While official reports suggest that China holds a moderate quantity of gold reserves, analysts and insiders hint at a far larger, concealed stockpile accumulated through strategic domestic mining, foreign acquisitions, and complex trading networks, a process that has unfolded largely in the shadows of global attention. The historical context is critical. During the late 20th century, China was industrializing at an unprecedented rate, facing massive currency fluctuations, and seeking to secure its economic sovereignty. Gold, historically regarded as a safe haven against currency instability, became a central pillar of China's long-term strategy. Unlike other nations that reveal their reserves annually with transparency, China's approach has been methodical, calculated, and deliberately opaque, often leveraging state-controlled banks and mining corporations to quietly acquire both domestic production and foreign holdings. By analyzing trade data, shipping logs, and import-export discrepancies, financial experts estimate that the real quantity of gold under China's control could be 2 to 3 times higher than officially reported figures, a staggering number that challenges the assumptions held by international markets. The accumulation process has not been random. It has been meticulously orchestrated, aligned with both financial and geopolitical ambitions, designed to secure a position of unparalleled influence on the global stage. What makes this accumulation even more striking is the integration with military strategy. In recent years, China has staged financial military parades that are ostensibly symbolic displays of national pride, but closer inspection suggests they serve multiple strategic purposes, including demonstrating logistical capacity, resource security, and the ability to mobilize and protect critical assets, such as gold reserves, in times of crisis. Every armored truck, every security convoy, every meticulously coordinated transport schedule is a signal to both domestic and international audiences. China has the capability and intent to control resources of immense strategic value. This convergence of financial acumen and military precision raises critical questions about global economic balance. How much gold is actually in Chinese hands? How does its accumulation affect the global supply-demand dynamics, the valuation of other currencies, and the stability of markets that depend on trust in official reporting? The answers remain elusive, but several observable patterns hint at the scale and sophistication of China's strategy. For example, the country has invested heavily in overseas mining operations, acquiring mines in Africa, South America, and Central Asia, often through state-owned enterprises or strategic partnerships, ensuring access to large quantities of gold with minimal market disruption. Domestically, China has modernized mining operations, integrating advanced technology and automation to increase extraction rates while reducing costs, allowing it to maintain a consistent and substantial flow of gold into national reserves. Beyond production, there is evidence of sophisticated financial engineering designed to conceal the true extent of holdings, including derivatives, futures contracts, and cross-border transactions that complicate efforts by foreign analysts to quantify real reserves. This layered strategy is not accidental. It reflects a deep understanding of global financial psychology and the strategic importance of perception. The mere suspicion that China holds more gold than officially declared exerts pressure on global markets, influencing commodity prices, trade negotiations, and international diplomacy. For everyday investors and policymakers, this translates into subtle but impactful shifts. Gold prices experience volatility not only from conventional market forces, but also from speculation about hidden reserves, while currencies that are traditionally pegged or influenced by gold valuations may see unexpected fluctuations. Historically, such maneuvers are reminiscent of great power strategies, where resource control is intertwined with political leverage. In addition, China's domestic policies reinforce this accumulation. Citizens are encouraged to invest in gold through regulated channels. Banks increase gold-backed savings products, and cultural reverence for gold ensures consistent domestic demand, which supports liquidity and stabilizes internal pricing. Internationally, China's low-profile acquisitions, often executed under joint ventures or through offshore entities, allow it to accumulate significant quantities without triggering geopolitical alarms. The orchestration of this strategy requires coordination across multiple ministries, private enterprises, and state-backed institutions, a level of complexity that underscores the seriousness of China's intent. Analysts observing international financial trends note that these activities have ripple effects across global markets. Nations that rely heavily on gold reserves as a hedge against currency volatility, such as the United States, Russia, and India, face uncertainty in strategic planning because the true extent of Chinese reserves remains opaque. Central banks monitor China's actions closely, adjusting their own reserves, gold-backed assets, and currency hedges in response to subtle signals, such as changes in reported imports, fluctuations in domestic mining output, or the conspicuous display of resources during public events. Adding to the intrigue is the potential timing of the reveal. China's staged financial military parades, which showcase precision logistics, disciplined security, and dramatic displays of national capability, are increasingly interpreted not just as ceremonial, but as prelude to broader strategic disclosures, possibly including a revelation of gold reserves that could shock international markets. If such a revelation occurs, the implications would be vast. Gold prices could spike, currency valuations may shift, and global financial strategies would require recalibration. Furthermore, the move could accelerate discussions about alternative global currencies, gold-backed trade mechanisms, and the restructuring of financial alliances, positioning China as a dominant influence in both economic and geopolitical arenas. For viewers trying to understand the stakes, it is essential to appreciate the scale of the strategy. This is not a matter of a few $billion worth of gold. It is the accumulation of a resource that underpins financial sovereignty, influences international trade, and intersects with military logistics, all orchestrated with an almost unparalleled level of precision. The narrative emerging from China's actions is clear. Gold is not merely a commodity, but a strategic asset that can shift the balance of power quietly, methodically, and with minimal immediate disruption to global markets until the moment of revelation arrives. As we continue to examine this phenomenon, the patterns become undeniable. Strategic accumulation, integrated security, domestic reinforcement, and international discretion form the pillars of China's gold strategy. The interplay of these factors makes the real reserves not just a number to be speculated about, but a lens through which to understand China's broader ambitions in global finance and geopolitics. Understanding this context prepares viewers to critically assess future developments, from fluctuating gold prices to currency negotiations, and to appreciate that what may seem like routine financial activity could, in reality, be a prelude to one of the most significant strategic moves of the 21st century. China's approach to gold is not merely about amassing a financial buffer. It is a deliberate, strategic integration of economic resources with military capability, creating a multi-layered system of national power that few countries can rival. The careful orchestration of military logistics, security operations, and financial instruments reflects an understanding that true strength lies in the intersection of wealth and strategic mobility. Over the last decade, observers have noted an increase in the sophistication of China's financial military exercises, particularly during national parades and publicized drills that, on the surface, display technological prowess and national pride, but at a deeper level, demonstrate the ability to secure, mobilize, and protect critical assets under highly controlled conditions. These parades often feature armored convoys, specialized transport vehicles, and highly disciplined formations that mimic real-world scenarios of asset movement and protection, including resources that could be of immense strategic value, such as gold reserves. Analysts have pointed out that the size, frequency, and precision of these demonstrations correlate with subtle changes in financial markets, hinting at an underlying communication strategy aimed at both domestic and international audiences. Financially, China has developed complex mechanisms to shield the true scale of its gold holdings, using derivatives, cross-border transactions, and joint ventures with foreign mining operations to mask the actual reserves. This combination of secrecy, market sophistication, and logistical demonstration signals to other nations that China possesses not only wealth, but the operational capacity to leverage it in ways that could shift global power dynamics. Military strategy is deeply intertwined with these economic maneuvers. For example, the country has invested heavily in specialized transportation fleets capable of moving high-value assets securely across vast distances, accompanied by rapid response units trained to neutralize potential threats, a capability that would be essential if gold reserves or other financial instruments became a target during periods of geopolitical tension. This integration is further enhanced by the use of cutting-edge surveillance, encrypted communications, and internal monitoring systems that ensure operational security while minimizing the risk of leaks to international observers. From a financial perspective, controlling gold is a hedge against external economic pressure. By accumulating and securing reserves that exceed public disclosure, China can stabilize its currency, maintain leverage in international trade negotiations, and influence global commodity prices without overtly disrupting the market. For other nations observing these maneuvers, the opacity of China's reserves generates uncertainty, which in itself becomes a tool of strategic influence. The careful timing of public demonstrations, such as financial military parades, serves multiple purposes. Domestically, it reinforces the narrative of strength and self-sufficiency, fostering national confidence and encouraging citizen participation in gold investments. Internationally, it signals preparedness and capability, subtly reminding other powers that China's financial and military resources are deeply interconnected. This dual strategy can be seen in the coordinated expansion of state-owned enterprises into foreign gold mining operations, often under joint ventures or partnerships that allow for resource acquisition without triggering geopolitical scrutiny. These operations are meticulously planned to maximize yield while minimizing public visibility, ensuring a steady inflow of gold that strengthens domestic reserves. Meanwhile, domestic mining modernization programs, including automation, AI-driven extraction processes, and environmentally conscious mining techniques, allow China to increase output efficiently, further consolidating control over resources critical to both financial stability and strategic autonomy. In addition, China has cultivated a domestic financial ecosystem that supports gold liquidity and ownership among its citizens while maintaining central control over aggregate national reserves. This is achieved through gold-backed savings products, investment schemes, and regulated exchanges, which not only stabilize domestic pricing, but also facilitate the internal circulation of gold in a manner that reinforces the perception of abundance and security. Internationally, analysts observe that these actions create a layer of uncertainty that is difficult to quantify. Central banks, commodity traders, and geopolitical strategists are forced to factor China's hidden reserves into their risk assessments, even when precise numbers remain unknown. The uncertainty itself becomes a strategic advantage, subtly influencing market behavior, currency valuations, and global trade negotiations. Furthermore, China's strategy accounts for potential geopolitical challenges. In scenarios of international tension, having gold reserves that are both significant and mobile provides the ability to protect national wealth, fund critical operations, or engage in trade even under sanctions or financial blockades. This forward-thinking approach demonstrates that the accumulation of gold is not simply about storage. It is a form of strategic insurance, a tangible asset that provides leverage and security in uncertain global conditions. The scale of coordination required is immense. Ministries, state-owned enterprises, military units, and financial institutions must all operate in concert, sharing intelligence, logistics, and timing to ensure that accumulation, protection, and potential deployment of gold reserves occur seamlessly. Analysts studying these patterns highlight that the synchronization between financial growth and military capability is not coincidental. It is the result of decades of planning, experimentation, and adaptation, designed to create a system where economic resources directly support national power projection. Even in times of apparent market calm, subtle indicators hint at ongoing strategic maneuvers. Shipping data, cross-border transactions, and unexplained movements in commodity exchanges provide clues to those who watch carefully, suggesting that gold accumulation is continuous, highly strategic, and closely linked to broader national priorities. The integration of gold reserves into military logistics also provides a symbolic and practical message to the global community. Symbolically, it demonstrates that China is prepared to defend and leverage its wealth with precision and authority. Practically, it ensures that the nation retains flexibility and resilience in responding to sudden crises, whether financial, geopolitical, or military. Observers also note that China's approach contrasts sharply with more transparent strategies seen in other nations. Where some countries prioritize public disclosure and conventional central bank reporting, China thrives on strategic ambiguity, understanding that hidden reserves combined with demonstrated logistical capability can exert influence without provoking immediate confrontation. This approach allows China to shape perceptions, influence markets, and negotiate from a position of quiet strength, a strategy that has already yielded significant advantages in international trade, currency management, and resource security. In sum, China's military financial strategy regarding gold is a masterclass in integration and foresight. It combines resource accumulation, domestic reinforcement, international discretion, and strategic mobility into a coherent system that simultaneously stabilizes the nation, projects power, and manipulates uncertainty to its advantage. The implications are profound. For investors, policymakers, and global powers alike, understanding this integrated approach is critical to anticipating future shifts in markets, alliances, and economic power balances. The story of China's gold is not just about bullion or reserves. It is a narrative of preparation, influence, and the subtle yet decisive ways in which a nation can intertwine finance and military capability to reshape global dynamics, quietly preparing for a revelation that could redefine the rules of economic engagement in the 21st century. As China continues to quietly accumulate gold reserves, the international community watches with a mix of curiosity, concern, and strategic calculation, knowing that the scale of these reserves could profoundly reshape financial and geopolitical dynamics. Economists, central bankers, and financial analysts around the world pore over import-export data, shipping logs, and corporate filings in an attempt to estimate the real size of China's holdings, often concluding that the official figures provided by the People's Bank of China represent only a fraction of the actual reserves. This discrepancy between official reports and expert estimates creates a climate of uncertainty that has tangible effects on global markets, influencing gold prices, currency valuations, and investor behavior, as stakeholders scramble to anticipate how and when China might leverage these hidden reserves. Analysts in Washington, London, and New Delhi have speculated that the potential revelation of China's true gold stockpile could prompt a seismic shift in global trade relationships, with nations that hold large reserves of fiat currency suddenly reconsidering their exposure to the US dollar or other traditional reserve currencies. Some strategists argue that China's accumulation effectively positions it to lead a future gold-backed financial system, a scenario that would challenge decades of dollar dominance and reshape the hierarchy of global economic influence. The mere perception that China may hold significantly more gold than publicly disclosed exerts pressure on other nations to reassess their own strategic reserves, leading to subtle but meaningful shifts in international financial policy. Central banks in Europe, Asia, and the Americas monitor Chinese gold purchases and domestic policies closely, adjusting interest rates, liquidity strategies, and reserve allocations in response to observed trends, even when precise quantities remain unknown. International media have also amplified speculation, often framing China's actions as a prelude to a major geopolitical move, generating headlines that range from cautious analysis to sensational predictions about global economic upheaval. While some commentators focus on the financial implications, others highlight the potential for strategic leverage, emphasizing that gold is not merely a commodity, but a tool that can influence diplomatic negotiations, trade agreements, and even military positioning. In addition, China's approach has generated debates among scholars and policy advisors about the nature of modern economic power, with some arguing that resource security, especially in gold, serves as a stabilizing force in a rapidly shifting geopolitical landscape, while others warn that hidden reserves and opaque strategies introduce volatility and uncertainty into global markets. Social media platforms and financial forums have become incubators for discussion and speculation, with analysts, investors, and ordinary citizens weighing in on the implications of potential revelations. Posts highlighting discrepancies between reported reserves and import patterns, videos analyzing the timing of parades, and discussions about possible new gold-backed financial instruments contribute to a global conversation that, while speculative, influences perceptions, market behavior, and international policy considerations. Investors, in particular, are acutely aware that any major disclosure of China's gold holdings could trigger rapid market adjustments, affecting commodity prices, stock indices, and currency exchange rates. Hedge funds and trading firms track shipments, contracts, and banking flows for subtle indicators, seeking opportunities to anticipate market reactions before they occur. Beyond financial circles, governments and intelligence agencies are also engaged in monitoring and analyzing China's activities, recognizing that resource control, particularly of strategic assets like gold, can translate into tangible geopolitical power. Reports from diplomatic channels suggest that discussions about gold reserves, currency diversification, and alternative trade mechanisms have intensified behind closed doors, reflecting both anticipation and concern about the potential consequences of China's next moves. Speculative scenarios range from the introduction of a gold-backed Chinese currency capable of rivaling the US dollar, to coordinated international responses aimed at mitigating financial risk, to more provocative interpretations suggesting that the strategic display of gold and military capability could serve as a soft power lever in regional or global negotiations. Analysts emphasize that the implications of China's gold strategy extend far beyond economics, touching on national security, international trade, and global governance. For example, if China were to leverage its reserves in a coordinated manner, it could influence commodity prices, pressure nations with heavy debt exposure, or secure preferential trade terms without overt confrontation, demonstrating the strategic versatility of gold as a tool of national power. Meanwhile, speculative media coverage amplifies uncertainty, creating feedback loops where market participants, policymakers, and analysts adjust strategies based on perceptions of potential moves rather than confirmed data. This dynamic introduces volatility into commodity markets, influences investor confidence, and subtly reshapes the global financial landscape even before any official revelation. Governments of major economies are acutely aware of these risks. Policy briefings frequently emphasize contingency planning for scenarios in which China reveals or strategically deploys a substantial portion of its hidden gold reserves, including considerations of currency stability, trade imbalances, and international credit markets. Economists note that while such a revelation would not necessarily constitute a crisis, the sudden adjustment in perceived global gold distribution could prompt rapid revaluation of assets, recalibration of currency holdings, and strategic repositioning by central banks, hedge funds, and multinational corporations. Furthermore, regional powers, particularly in Asia, monitor China's strategy with heightened sensitivity. Nations such as India, Japan, and Russia assess both financial and geopolitical implications, recognizing that gold accumulation underpins not just economic strength, but the capacity to assert influence in regional security, trade negotiations, and strategic alliances. International think tanks and financial institutions produce periodic reports attempting to quantify the scale of China's reserves and model potential impacts, employing historical trends, mining production data, import records, and even satellite imagery to refine estimates, highlighting the level of global attention focused on this issue. Interestingly, public sentiment in Western and Asian nations reflects a mix of fascination and apprehension, as citizens grapple with the abstract but potentially monumental impact of a single nation quietly controlling vast quantities of a resource that has underpinned human economies for millennia. Financial commentators often describe China's approach as a form of strategic patience, a long-game tactic that leverages secrecy, perception, and timing to maximize influence while minimizing immediate confrontation or disruption. Within academic circles, there is debate about whether China's strategy represents a paradigm shift in how nations wield economic power. Some scholars argue that combining hidden reserves with military logistical capability exemplifies a new model of soft power projection, where influence is exerted through perception and preparedness rather than direct aggression. Others caution that the opacity inherent in China's approach introduces systemic uncertainty into international finance, requiring other nations to adopt defensive or anticipatory strategies that can themselves create instability. Social, economic, and technological factors also converge to amplify the impact of speculation. Advances in data analytics, satellite tracking, and financial modeling allow analysts to detect patterns in gold movement, trade, and production that were previously invisible, feeding both informed assessment and speculative hype. At the same time, media amplification ensures that public perception often outpaces factual reporting, creating a global narrative in which China's gold reserves are simultaneously mysterious, influential, and strategically potent. For investors and market participants, the lesson is clear. Even without concrete disclosures, China's gold strategy drives market behavior, shaping commodity pricing, influencing currency confidence, and altering risk assessments in profound ways. This dynamic has implications for global trade, financial planning, and diplomatic strategy, as nations adjust to the reality that a hidden reserve of immense value exists under the control of a single, strategically savvy actor. In summary, the global reaction to China's gold strategy is a complex interplay of speculation, analysis, and strategic positioning, with consequences that extend far beyond immediate market impacts. By observing patterns, interpreting signals, and modeling potential outcomes, analysts, policymakers, and investors attempt to navigate an environment shaped as much by perception and anticipation as by confirmed data. As China continues its measured accumulation and carefully choreographed displays of financial military strength, the world remains in a state of suspense, recognizing that the eventual revelation of real gold reserves could redefine power structures, reshape financial hierarchies, and alter the course of international relations in ways that are only beginning to be imagined.